Venture capital investing is up 41% in the first quarter of this year compared to last year, and the number of startup acquisitions is at an all-time high. But can it last? Our Cris Valerio joins us live from the National Venture Capital Association with a special guest. Cris?
That's right. I'm here with Ted Schlein. He's a managing partner at Kleiner Perkins. Thank you so much for joining us today. Really appreciate it.
Thanks for having me.
The first thing I have to ask, you just heard venture capital investments up hugely in the first quarter of this year. That said, the amount of money that venture capitalists are taking in really falling off. So you guys, Kleiner Perkins, have raised 14 funds, one of the biggest known names in Silicon Valley. How is it for you guys right now as far as raising funds?
Well, fundraising for a firm that's been around for a while, has a track record, is harder but can be done. I think it's harder for the smaller firms that did not have a prior track record, that their first funds might have been in the last decade. To go out and raise a new fund is pretty challenging. So as a result, you're seeing a contracting in the venture market. And I think it's a natural evolution of our marketplace.
One of the things also, obviously, that's been happening a lot is we've seen this huge jump in acquisitions, mainly because there just was no exit at all in the last year or two. Also, IPOs coming up. So when you look at all the different holdings that Kleiner Perkins has right now, if you had to put a percentage on it of how many companies would be exiting within the next 12 to 18 months, what would that be?
I'd say that there may be 10% of the companies are now mature enough to have some form of an exit, whether it be an M&A transaction or an IPO. And believe me, it's great to just utter the letters IPO again. So it's nice to see the markets coming back when the capital markets are there, the M&A market is there. So they go hand in hand with one another. But I would hope that about 10% of the portfolio might have the opportunity to have some form of liquidity event over the next 12 to 18 months.
Hey, Ted, I want to jump in. It's been a tough environment. I'm just curious where you're seeing the most activity in terms of, possible companies to invest in. Where's there most opportunities at this point, the most interesting opportunities in your view?
Well, we are seeing an enormous amount going on in what we call green tech. Everything around new energy, alternative energy generation, to energy storage. There's just a huge amount taking place, so the whole venture industry is now focused there. The other big area is really around the consumer-facing web. It is just taken off to a new level. You no longer have to have picked the standards like a Google or an Amazon. You can now do very targeted businesses and make them very large, whether it might be a Zynga in social gaming or a Chegg in textbook rentals. These are very targeted opportunities on the consumer web, all enmeshed in social networking. And obviously we have a lot. Facebook we have a lot to thank to Facebook for making that very popular.
Hey, Ted, what about CapEx spending? Companies are flush with cash right now. The question is, what will they do with it? And most of the big investors that we have on this show think they're going to spend money on technology. Are you seeing that? Does that help the smaller companies as well as the big ones?
It sure does. I was with a group of 25 CIOs of some of the largest corporations in the world last week, and they are anxious to deploy new innovations. And it's not just around cost savings. They're now actually talking about how to raise their top lines. So I actually think you are right. The balance sheets are big, both in just the Fortune 500 as well as in the tech sector. The tech sector piece will lead to more M&As. In the Fortune 500, I think you're going to see a lot of new innovation buying.
Ted, one of the things that we've had a lot of this hour, and I just want to turn to, is the financial reform and the regulatory reform. I know that you've been really active in the carry interest rate issue. So when you look at kind of all that's happening in Washington, what's the biggest issue out there for venture capitalists like yourself, and specifically for big firms like Kleiner Perkins?
Well, the biggest issue is the venture industry has to pay attention to Washington now. And we are. One of the biggest issues that's being debated and has been debated now numerous times is, are they going to change how venture folks are taxed? And what's being put in front of them right now is essentially doubling the tax on venture capitalists. And as we know, if you tax something more, you will eventually get less of it. And I look at the venture industry as probably the greatest non-government funded job creation industry that our country has, both around innovation, which then leads to job creation. I think it would be crazy to go change the tax status of the venture industry.
And we're certainly going to be tracking that. Thank you so much, Ted Schlein, one of the managing partners at Kleiner Perkins.